Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, September 16th, 5:08 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in an trend after nice turnaround in the markets last Wednesday after a violent morning shakeout. You can see we have the coveted four green arrows on the trend gauge over here, meaning bullish posture for market leaders, as well as all five, actually, let's make it six of the major indexes. We're going to include RSP, equal weight S&P 500 in there. All of them trending above their short-term 21-day, medium-term 50-day, and long-term 200-day moving average. Big day on Wednesday with the first rate cut coming into view. The question is, will it be 25 basis points or 50 basis points? But even more importantly, how will the market react to it? So here's what happened today. Big tech took a rest. Value stocks led, value sectors, and all awaiting that FOMC Wednesday, 2 p.m. Eastern time announcement, followed by statement and press conference. Here are the final numbers. 21 over 21 list, up an average of 1.06%, 14 up, 2 neutral, 5 down. Big 8, as I mentioned in the title, took a rest today, down an average of 0.48%. Apple, Tesla, and Nvidia all down 1.5% or more. Meta led to the upside, up 1.8%. RG8, this is our 8 growth ETF composite, up 1/3%. S&P 500 opened down 0.1%. Flapped its wings around a little bit, tried to sell off in the morning, but it was bought up. We had a slow melt up in the afternoon, closing near the highs of the day. Ended up 0.13%. Equal weight. Here's where you can see the breadth and the fact that value outperformed growth. Equal weight up 0.73%, the index leader on the day. NASDAQ 100 down 0.4%, equal weight just barely positive. Dow up 0.55, mid caps up 0.65, Russell 2000 small caps up 1/3%. Same as global diversified 60/40 stock and bond. Our flagship GROTECTION portfolio up 0.29%. We'll go through all of our holdings and the new 21 over 21 list for the week as we progress through the video. Let's start off with the S&P 500. So here you can see 5 blue bars in a row, not really 5 up days, arguably, because of this big shakeout on Wednesday, but 6 higher closes, just eclipsing yesterday's close and high by the late afternoon. Well, we got there early morning with the first 30-minute, broke below the 30-minute. So we kind of back away a little bit, take our fingers off the keyboard, consider buying when you're below the opening 30-minute range and let things play out a little bit. But some buyers came in, volume kind of light, not surprising considering the FOMC, as I said, on Wednesday. But we got this big 56.52 to 56.70 overhead resistance level just overhead that the S&P 500 has to get through, and that'll take us to all-time highs. NASDAQ 100 here taking a bit of a breather, but bouncing right at the 50-day, which is just above the uptrending 8 and 21-day moving average. Again, the big shakeout on Wednesday, the impetus for this latest move higher. Nice consolidation day here today. Let's go to the Dow. Dow, 4 strong straight days up, and that's an all-time high, bouncing off that 40,000 level again on Wednesday morning. And S&P 400 mid cap, same situation, except off the 200-day moving average. 4 big up days there, and the Russell 2000. I'm going to see something similar. If I can get my fingers to work here, there it is, 4 up days, not quite to the 200-day, but above all key moving averages. And you've got the 21 and the 8 poised to come up through the 50-day. Let's talk about the 6th major average. Did you know that S&P is rebalancing We talked about this a little while back. They've tried to accommodate in their spider sectors to reduce the heavy weightings in there, and they had some rules, but those rules ended up biting them in the behind as we talked briefly about this. Apple has a massively lower allocation to the XLK, while NVIDIA and Microsoft are about 20% each. And the reason for that is because of their rules for what the top two had to be. And if you add this up, it can't go over this, blah, blah, blah. But it ended up at the last day of the quarter, this past quarter. We're waiting to see. They were all battling neck and neck, NVIDIA, Microsoft, and Apple, for what we're going to get the top two spots because they would get the 20% weighting in XLK, and the loser would be chopped down to 5%, and Apple was the loser. But they're changing their formulas to try to smooth those three weightings out since they're obviously out of whack. And this is again just one more reason why we have lately been paying more attention to what's going on with these equal weight indexes because it's a truer representation of what's going on with the overall market. If the Nasdaq 100 is going to lead, the market cap weighted S&P is going to lead the RSP. If the big tech names are pulling back, the RSP is going to outperform the S&P 500, and we'll look for opportunities in whichever one is taking the lead. Let's go to the VIX. Pull back today in the VIX up slightly, but below the 21-day moving average and not too far from that key 16 level that we'd like to see. We certainly like it a lot here, better, a lot more here than we did in the mid 20s. Wouldn't be surprised to see a tick up in volatility tomorrow with the FOMC coming on Wednesday. Let's go to the dollar. US dollar down near the lows from 2, 3 weeks ago, which also matched the lows from in back in December. And this is a benefit to stocks to have a weaker dollar. How did that carry over to precious metals? Gold, tight range trading today, right up near after two gaps higher. This is kind of what you want, a little bit of a rest. Everybody's just screaming about gold all-time highs. Oh my God, gold! What are you doing in stocks? But look at this relative strength line here, and you can see the fact that that's trending lower indicates that since gold tried to break out back in April, that the S&P is outperforming. However, if you look at the prior breakout there, which was actually back in February, the gold is outperforming. So we're positioned in NUGT right now since this move, this first gap up higher. And we get involved in gold for some smaller asset allocation accounts and also when the relative strength is very clearly at our back. So that's GLD. How did silver do on the day? Up 0.18%, and gold stocks pulled back slightly, but resting right near the highs and that 40 level, down 0.5% on the day. Bitcoin, however, made a move on Friday, but gave it back today, down 3.11%. You want to see this reclaim that 21 and 50-day moving averages. Let's go to bonds now. BND, the broad bond index, up, continuing to trend higher above the 8-day exponential moving average. This is a time when you can actually get capital gains in your bond funds in addition to the yields that you get. Same thing for TLT, trending higher above the 8-day moving average and making a new recent high. We own TOTL, which is run by Double Line's Jeff Gunlock. It was up 0.25% on the day again, riding that 8 EMA higher. Prices are up. That means the yields are down. The 30-year, you can see the yield dropping here to lows not seen since last December. Same situation with the TNX, making new lows during this. And that's what we'll be seeing from the Fed, though they only control the Fed funds rate, which is short term. Then you take the yield curve higher since then, although it had been inverted, but it's getting uninverted probably as we speak. All right, so here's the tail of the tape. got a lot. We got a lot of bullish setups here. We've got the stochastics all at our back. We got the our trending higher. We've got the NASI RSI higher. We've got the dollar weak. But it all comes down to the reaction. That's what I have highlighted under news here. FOMC Wednesday at 2 p.m. So on Friday when I did the video, we were looking at 63% chance of a 50 basis point cut and 37 for a 25. Sorry, we're looking at 55-45 in favor of the 25 point basis cut. At the market close today, we're up to 63% for 50 points. So the pendulum swinging more toward 50 point. And we are mildly concerned about the volatility. You never want to get shaken out just because of volatility. But we're not adding a whole lot of things to the portfolio. We like the way we're positioned going in to this event. He's coming into today. We said, let's take a look at the S&P above this 56.52 to 56.70 level. We're continue to consolidate below that. Which index showed relative strength? Well, didn't expect to put RSP in here, but that's what it was. While on the weak side, then as I mentioned, the NASDAQ 100, 6 days up, 4 days above the 8 and 21-day moving averages. Expectations remain positive as long as we stay above the 21-day moving averages. Not a lot of major standouts in sectors today. Oils and banks, 9 of the 11 to the upside. The only two to the downside were XLKNY, that's tech and consumer discretionary. Gold stocks also down, as well as semiconductors pulling back. No change to the portfolio today. Here is our holdings listed first by index ETFs, then by bonds, sector ETFs, and then largest to smallest by the 6 positions that we own: Kava, NVIDIA, Now, Oracle, Lilly, and MSTR. And tomorrow, the key's pretty much going to be the same as today. What's the S&P doing below as it consolidates below this band of resistance just overhead? And where's the relative strength? That could all obviously change quickly Wednesday afternoon. But the bottom line on the day, big tech took a rest, value led, FOMC rate cut looming. The question, of course, how big is that rate cut going to be? So let's go to the 21 over 21 list and we'll sort it by percent up on the day. Anything that we own is flagged with a green arrow here. We'll start with Oracle. After big gap up on Friday, gave it all back as the day went along, recouping quite a bit of that, though. So the gap up was on 2025. Guidance was raised. It was sold into, but look, volume higher today than it was Friday. This is very clearly being accumulated, up 5% on the day. Zillow, new addition, breaking out very nicely on Friday and following through today on a cup and handle base. SFM, Sprouts Farmers Market, continues to make new highs after bouncing off the 21 last week. Palantir also continuing to make new highs since its addition to the S&P 500. GEV, just a rocket ship higher off of that 200 level. Fortinet bounced on lower volume into the 21-day last week, bounced off of that and made a second-day new high. Axon, after a big move up on Thursday, making a higher high after a nice consolidation on Friday. ServiceNow continues to trend higher above the 8 EMA, making new highs. FFIV, 4-day beautiful bounce off the 21-day. Flutter, this is FanDuel parent company, continuing to trend higher along the eight-day exponential moving average. ITB Builders also had to shake out on Wednesday, making a higher high. We own Nail, the leveraged ETF, but we make our decisions based on the underlying ITB and the holdings in ITB, not on what Nail is doing. GWRE continuing higher since its earnings gap up. Dark Ninja continues to work its way higher. Kava pulled back today, bounced off the 8-day moving average and was slightly up on the day on declining volume. Affirm pulled back to the 21-day last week and bounced off that and has had 4 nice positive days. Lilly reclaimed the 21 last week. We're still holding on to our position in this as it held the 50-day, sitting right on the 21. DoorDash with a cup and handle breakout on Friday, consolidating right near the pivot today. GDX, I mentioned we own NUGT, 2 gaps up and a consolidation day today. IoT volatile, right into the pivot plus 20% level. SE pulling back today after bouncing off the 21 last week. And a video, we got back into this last week on the move back above the 50-day. Tight day on Friday, pulled back on lighter volume again today. Here's the Pay attention to this. While there was selling on the way down, found support at that 100 level. Big volume came in to get it back above the 8, 21, and 50-day moving average, and now two very low volume days of consolidation. The stock is not expensive. PE of 54 with 118% growth in fiscal 2025. If the market's going higher, this was the leader on the prior leg up. That's why we keep such a close eye on it. And it's got room to catch up with the relative strength lagging along with price. Still 97 relative strength on a 12-month basis because of its huge run prior to that. And that is the 21 over 21 list for this week. Helps keep our finger on the pulse of 21 stocks on our focus list, most of which most of our buys come from this list. Occasionally, like I mentioned last week when I did the video on Monday, I was surprised at the strength that individual names were showing relative to the indexes. And that set us up for that big positive reversal on Wednesday. Sometimes the indexes outperform leading stocks. Sometimes leading stocks outperform the indexes. And that's what the RG8 is designed, and the 2121 list is designed to keep us on the right side there. It's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, a lot of people still reaching out after my IBD appearance 2 weeks ago on Friday, IBD live appearance. And hey, better late than never. We'll talk to anybody, and we are strong believers in our way of investing. It's named GROTECTION. It's designed with a dual mandate, and that is grow assets during uptrends, protect them during downtrends. Before you get into full protection mode, very often we pull back in our exposure as the market pulls back. You never know how far or how harsh a pullback is going to be. Is it the garden variety 4%? Is it a little worse, 8 or 10%? Or is it a bear market? Well, all bear markets take place below this black line here. That's 40-week / 200-day moving average. And this is when we get the heck out of the way. Very similar to the way we did, and we describe on video every night what we're doing. This is how we lost less than half of what the market lost during the 2022 inflation-driven bear market. If you're interested in this, what we consider to be a common sense approach, all of my money and all of my partner Dan Stewart's money and all of our family money is in this exact approach. We put our money where our mouth is, and proud of it. So if you're interested, reach out to us. And with that, we'll wrap it for Monday, September 16th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.